Hello, everyone. Thanks for joining our Silicon Heartland online series today. Today we have Ray Leach joining us from JumpStart in Cleveland. Hello, Ray. How are you today?
I'm great, Rebecca. Great to be with you.
Oh, good. Well, we've got a great show coming up, and please warm up your questions for Ray because he is going to be in the hot seat. And yeah, we got lots of good attendees for him. So get your questions ready to put in the chat and we'll get them answered for you. So I did spend some time in Cleveland researching my book. As you can see here, if anyone who's been to Cleveland, they already know this shot. But some of the rest of you may not have been to Cleveland recently, and there it is. Okay, so a little bit about JumpStart. I'm going to say a few introductory remarks about Ray and also about JumpStart. So Ray actually set up JumpStart, and it is a nonprofit venture development organization. It is a hybrid kind of venture capital model that is working very well in Ohio. He began his career at IBM. He's founded 4 startups. He was a founding member of the Commerce Department's National Advisory Council on Innovation and Entrepreneurship. He grew up in Akron, so not too far from Cleveland. He's a graduate of MIT Sloan School of Management and University of Akron. And I found out that he is kind of the director of a family of creatives. So we get to hear a little bit more about that. Great to have be surrounded by creative people and also be in the directorship spot. Okay, so JumpStart, based in Cleveland, a lot of healthcare deals and quite a lot of SaaS deals. So software as a service for those who are not familiar with SaaS, but I think most of you are who are listening to the show. Now, JumpStart raised its first fund, 18 million, its second fund, 43 million, and there's a third fund in the works. So that will be very interesting, and maybe we'll hear more about that this summer. Now, JumpStart Ventures broke out from the parent in 2022, and it's focusing on Northeast Ohio and investing with partners statewide. In 2022, invested 16 million in 42 portfolio companies. That's quite a few portfolio companies in 1 year, and 16 million. Some of their success stories, Cover My Meds. We'll like to hear Ray talk a little bit more about that, and also Ring, which is a double exit, which is really interesting. So JumpStart, its whole rationale is economic impact and entrepreneurship. JumpStart has helped to create $10.3 billion in economic impact since 2010. Okay, so there we go. Just a few contextual remarks here. In terms of top talent pools, Cleveland ranks pretty high, a 14% growth in the last 5 years, 2015 to 2020, 14.1% in terms of talent growth in the tech field. So that is a big switch from the industrial background of Cleveland. Now, those who have been on the show before know that they've heard me say venture capital is growing, but it's still scarce in the heartland. 75% of the money still goes to New York, California, and Boston. But Ohio is gaining. So thank you, Vicki, for helping me with the research for this session today, because we can now say that during 2022, Ohio had 195 deals worth 2.1 billion, and that's a huge increase from before. And so the Great Lakes also 17 billion in terms of venture capital invested in 2022. Cleveland startups 578 million in 2022. So these numbers are not small and they are growing, but the issue is that only 10% of VC deals and 6% of VC money goes to the 7 Rust Belt states. Okay, so we've got some context here, but JumpStart is here to solve all of these problems and provide more money to entrepreneurs in the Midwest and in the Great Lakes. this is a very interesting chart, and this will be the last chart that I show, so just bear with me while I show this chart, because it shows you how the Great Lakes backs up to the other regions in the United States. And this is a 63% increase in dollar spending for venture capital in the Great Lakes. That's a big jump. And the Great Lakes ranks 5th out of the US regions in terms of venture capital spending. So, you know, we know that the West Coast dominates, and we know that New England also dominates with Boston. So anyhow, let's turn it over to Ray. And Ray, given this context, I know JumpStart has had a major impact in building the entrepreneurial system in Ohio, and also investing in numerous startups. So can you walk us through that? What do you think has been JumpStart's major contribution, and what do you still hope to achieve?
Well, I appreciate the preview and the question and the opportunity to have the conversation with my peers and partners in terms of the democratization of the venture capital industry across the country, which is obviously I've spent the last 20 years at JumpStart trying to help a state and a region more fully participate in the venture capital industry and the economy. And I guess what I'd say is this, first of all, as I've really come to understand, it's probably a 2-generation kind of challenge.
Okay.
Just for a little bit of context, if you think of 1960 and the invention of the venture capital industry and what happened by 1980, not a whole lot in the first 20 years of the venture capital industry. And what did happen happened in a few places, and those places got a head start. But I think about the work in Ohio is really we're realizing about our 20th year of as a state, not just at JumpStart, but as a state, of being very focused on putting the pieces and of the puzzle together to try to create a more meaningful venture capital ecosystem. So you would think, I think one of the biggest challenges for anyone in the heartland or in the flyover states is first finding the money, obviously, to invest in companies and be able to write meaningful checks in companies. But then along with that, to have the talent that can surround the companies pre-investment, helping the companies through the investment period, and then post-investment. Particularly if you're in a region where there weren't a lot of tech startups. And to give a little bit of context, in 2003, when JumpStart was founded, Northeast Ohio was like the worst performing high-tech entrepreneurial regional economy. Northeast Ohio is about 4 million people. It was the worst in the country for basically a decade.
Wow.
So the least number of startups, the lowest amount of money. Now, why might that be? Well, this was one of the world centers of manufacturing, right? And all the jobs, we had offshoring. So not only was the macro economy struggled with all these things, but to put it simply, the culture, the business culture of our community, entrepreneurship, particularly high-tech entrepreneurship, was not even in the top 15 areas people would work in. So if you've been in a very just another piece of context. Cleveland was the 5th largest city in the United States in 1956. Today, it's the 34th largest city in the United States.
Yeah.
So
and Columbus and I remember Cleveland was the biggest city in Ohio, and Columbus surpassed that.
And that's been relatively recently that's happened. But getting back to the founding story, the vision for JumpStart, and I'm the founder of JumpStart and now JumpStart Ventures on our investing arm, and we've been investing from day one. So we've invested a total of $86 million over the last 20 years, about $500,000 on average per company, and our check sizes have been getting bigger over time. But the inspiration for JumpStart was, how can we get in the game? How do we start? And really we started with what we would now call a pre-seed or seed fund that invested on average a little under about $450,000 in the first 30 to 40 companies that we invested in. And that was kind of the beginning now almost 20 years ago. And of course, if you're investing at pre-seed and seed, you'll get to exits, but it's going to take 7, 8, 9, 10 years. So by around that period of time, we started to generate exits, and slowly but surely we've become a more meaningful, not only has JumpStart become more meaningful, but the other players, and there's a half a dozen other major players in Ohio who are now our co-investors, but have really been our collaborators over the last 15 to 20 years.
Yeah, so you collaborate with a group in Dayton and a group in Youngstown, and where else? Several others.
Columbus, Cincinnati,
yeah,
Athens, Ohio, which is the home of Ohio University, Toledo. You know, that's another thing that's a little unusual about Ohio. We have 9 cities of over 100,000 people. And we have very, very diverse economies. We have a $620 billion economy. We're the 7th largest economy in the United States as a state. And we have incredible diversity. You know, Procter & Gamble, obviously in Cincinnati.
yeah.
Large, very large healthcare systems statewide. Cleveland's obviously very well known for our healthcare systems. So that diversity, it's, you know, net, the diversity is a strength, you know, as a state. But, you know, if you have city states, sometimes those city states compete. And one of the things I'm the most proud of is how the investors in Ohio have really come together to collaborate, co-invest, and support our most promising companies in the state.
Right. Well, I know Athens very well. I'm an OU grad. And my father was an OU professor.
Well, the group at Ohio University and Athens is a really, really impressive organization, and they do venture investing as well out of Southeast Ohio.
Right. Yeah. One of the companies that I wrote about in my book is a company based right outside of Athens in Plains, Ohio. And they developed this technology for storing vaccines in ultra cold facilities. And they sold that company and did very well.
Yeah, that was a great exit for Ohio, and an early exit from the ecosystem.
Well, you've had some other early exits, such as Cover My Meds. I think that's the biggest one in Ohio, right?
Yeah, it's probably the biggest one to date. So JumpStart was a founding investor in a company called Cover My Meds, and a healthcare IT company. And that investment was in 2009. And in 2017, they were acquired by McKesson for $1.4 billion. So this is an amazing company founded obviously in Ohio, and has had huge growth in Ohio, thousands of jobs. You know, it started with 3 people in 2008, 2009, and that's been our most significant and highest profile exit to date.
Yeah, that's great. So we do have a question here from one of our regular listeners. Hal Kelman wants to know, have you done any investments with Cleveland-based Morgenthaler, DC? I think they're out of DC. Are they out of DC or out of San Francisco?
Well, so David Morgenthaler was my mentor. So David and I were
really
close. David passed away about 6 years ago.
Yeah.
But David, so I spoke to David weekly for 10, 12 years.
Wow.
And David spent his time, David came to Cleveland in the 50s. He founded Morgenthaler Ventures in the late 60s. They also had a big private equity business, and it ended up that a lot of the venture activity of Morgenthaler ended up being on the West Coast, where the private equity was more in Cleveland. So JumpStart never had, I think we did a co-invest in one company back in like 2000, 2004, 2006. But we didn't do a whole lot of co-investing with Morgenthaler, given their focus in the Midwest was more on private equity. But I consider David, you know, one of the most important mentors. He is probably the most important mentor I've ever had. An incredible man.
Wow. Wow, that's great. So a question came in earlier from a fellow at Case Western Reserve University, an entrepreneur who's connected with that whole community. They are based in Cleveland. And he wanted to know, considering Cleveland's heritage as an industrial base, right? Manufacturing, industry, steel, all this. Why aren't you investing more in those kind of companies instead of so many of these SaaS companies?
Yeah, it's one of the fundamentals, I think, of the venture business is, there are big challenges and problems and opportunities clearly in industrial markets.
Yeah.
But our average check size is under $1.5 million. And our investors are expecting us to generate really significant returns.
Right.
So I think the capital efficiency of software companies is why we spend about 60% of our portfolio today are enterprise software companies. And I think as a small check writer, if we had a $200-300 million fund, we could be a more significant player in the clean tech space, and maybe JumpStart will build funds in the future that are larger, that have the ability to play a role there. But given the economics of the size of our funds, it's very, very hard to own a meaningful stake in the company. One other challenge, I think, for a smaller check writer in industrial companies is the switching costs. I mean, we have invested in probably 1 to 2 dozen companies over our tenure that are focused on solving large industrial issues. And to get large companies to change their technology in 10 years sometimes is hard. So I think for us, we're trying to generate exits within 4 to 8 years.
Right.
So that's much easier to do in software than it is in some of the more capital intensive industries.
Sure. So Matt Shapiro, who is a co-founder of MedPilot, one of those Cleveland-based companies that has done very well. He has another question for you. Ray has done a tremendous job helping build our startup ecosystem. Curious, what other things that you think need to happen to drive Cleveland farther up the rankings?
Well, the biggest frustration of being in a place like Cleveland, or let's say in a flyover state, is probably 60% of the wealth in our community over the last 2 generations has been generated in real estate or in transportation logistics or in advanced manufacturing. So, the lubricant that makes the venture ecosystem work or accelerate is capital. And Cleveland, and frankly, I would say Ohio, it's a whole lot better than it used to be, but we're still a huge capital importer. So the more capital one can aggregate, the more quickly one can move up the ecosystem. And frankly, it's more shots on goal. So the greater likelihood is you're going to generate more returns. So it's a real inertia story. We're coming up on our 20th anniversary. And on one hand, I have no idea how we came up we've raised 140 million. We've invested almost 90. So we've got more to invest. But the effort it's taken to raise that money is very, very, very substantial. You wouldn't think it would be that hard.
Yeah.
Wealth that is in our community, but that wealth was not generated by tech companies. So connecting the dots between the folks who have the money and the economic and investment opportunities that are out there. So you cannot understate culture, the impact of the culture of a community. Now, having said that, another thing I think is so interesting is you look at a place like Pittsburgh.
I was going to bring that up and say they have the same problem there.
Yeah. So Pittsburgh, in some ways, I'd say Pittsburgh is 15 years ahead of Cleveland because the universities and the healthcare institutions are really, really, really focused on startups. And yet in Pittsburgh, there's also not a lot of capital. So it's like, here you have these incredibly important institutions. And of course, we have the Cleveland Clinic and Case and university hospitals and others that are doing startups. But, you know, how does one get all the pieces of the puzzle at the right order or the right stage to really accelerate these opportunities? And unfortunately, it just takes way longer than anybody would like it to be, at least in 95% of the cases.
Right. Like you said, it might be another generation, a decade from now, before these entrepreneurs today who are succeeding, then they become angel investors, which I've seen a few of them do,
Sure.
or become serial entrepreneurs, and then that whole feeds the whole system. I mean, why are startups so important to an economic growth of a city?
So that's been a huge talk track of my time at JumpStart over 20 years. I think it first starts with, you know, and I know this is something a lot of people I'm sure who are listening know, 100% of all net new jobs in the US economy are from startups. Now, they're not all tech startups, but tech startups disproportionately generate, over the last 2 generations, they dramatically disproportionately generate new jobs. So this creative destruction, this velocity that is required as a requirement really of a thriving capitalist economy is critically important. And, you know, Cleveland, a fun little anecdote, you know, a third to half of the millionaires in the United States lived in Cleveland in the 1890s because of John D. Rockefeller.
Yeah, wow.
But when he created Standard Oil, you know, he really knew how to build an oligopoly, if not a monopoly. And he went to all the young companies that were serving him, and he basically did the deal of either you sell to me in return for Standard Oil stock, or I'll drive the price of what you're selling to me to zero, or I'll go to somebody else. You know, so he was an incredible business leader and ended up creating a city of remarkable wealth. But, you know, that only lasted for the next 50 years or 60 years. And so these things, you know, come and go. And I think one of the things that we're really excited about in Cleveland, but also in Ohio, there's some of the macroeconomic trends of the globe, of the global economy, are now starting to play. We have water, climate change is not a big deal here. We have physical infrastructure. We have a lot of those innate resources that, of course, the supply chain, we all know what the pandemic has done to that. So we feel like we've walked through the desert in Cleveland for 50 years, and we feel like we're coming out on the other side with a lot more opportunity. And startups are certainly a big part of that. Yeah.
Okay. So another question. This is from Hal Kelman again. What vertical markets do you like in SaaS? Since their software covers so many tech sectors, which ones do you like? Does JumpStart like?
Yeah, I think for us, it's healthcare. So healthcare is probably, it's between healthcare and logistics. Those two verticals probably represent 70 to 80% of our total SaaS investments. So, you know, Cleveland is a huge healthcare economy. We have 4 major hospital systems within a 5-mile radius of where I'm standing. Cleveland Clinic, University Hospitals. We have a very large VA hospital, and we have a public hospital here in Cleveland. So we have an incredible test bed for healthcare IT technology right in our hometown. And of course, it addresses very, very big market needs that, you know, you're able to demonstrate and hopefully get to exit. And of course, given their software companies, most of these businesses don't need to raise more than maybe 10 to 15 million, unless they really want to scale to the next level. Then maybe they need to raise another round, but they're pretty capital efficient.
Right. So Cover My Meds was an acquisition, success through acquisition. What about through IPOs? Does Cleveland have any IPO, like big high profile IPOs like Pittsburgh has Duolingo and
we do not yet. Now, of course, Drive Capital, headquartered in Columbus, would take credit for Duolingo. They're a big investor. It's not an Ohio company, but you know, there is an Ohio investor.
Right.
So I think Cover My Meds could have gone down that path and chose not to. There are many companies in Ohio today that I think have the aspiration to go down that path in the next, now probably 2 to 4 years. You know, if things were different, maybe be this year or next year. It might be take a little longer given the global economy, but JumpStart has yet to have a company go public.
Okay. Well, that is not necessarily the be all and end all.
Right.
Look what happened to a Root in Columbus.
Yeah, I mean, it's, obviously there's a huge, there's a cost to going public. And there's a whole new set of challenges in going public.
Oh, yeah.
So yeah, there's pros and cons for sure.
Right. So I'm just thinking about all those Chinese companies that I covered for many years, and they went public or they got it. Well, going public was the main way that the exits occurred. But then there was all this friction over those listings on NASDAQ and the New York Stock Exchange. So some of them delisted. And so it becomes much harder. All the entrepreneurs I've ever talked to say much harder to manage a publicly traded company than one that's privately held. You got to answer to the stockholders all the time. It's all about growth, revenue growth, profitability. Yeah. I mean, and it's no longer your company, really. So what do you advise entrepreneurs today about the path that they should take?
We like keeping it simple. I mean, of course, really what this comes down to is access to capital, right? So most companies went public to get access to capital over my career. That was the logic to do that. Where now you don't need to go public to get access to a lot of capital. Over the last, 5 to 10 years, we might be in a little bit of a challenge right now, depending on the valuation of the company in its last round. But I do think the fundamentals of going public are very different because the venture ecosystem is a global ecosystem now. There's way more venture overseas, and there's interested investors from overseas. So I think one of the interesting things about COVID is that I do believe it really accelerated the globalization and, of course, the democratization of venture. You probably saw the stat. Our team was recently talking about it. What was it? I think it was the average mile distance between the lead investor and a Series A startup from 2017. I think the distance was on average 120 miles. And as of 2021, it went to 400 miles. So this idea that the venture investing ecosystem is expanding, that you can get a first check from an investor who is not a 1-hour drive or a 2-hour drive away, is very, very real now. And of course, we didn't see that coming with COVID. We didn't know that was going to happen. So that was a silver lining of sorts. And we're still seeing a lot of that staying, that our companies in Ohio are able to raise capital from all over the world a lot more easily than they ever could have 5-10 years ago.
Right. Well, I think the pandemic did change an awful lot. And one of the things that changed was remote working. It's now kind of acceptable. What about in Cleveland? Are people back to work there yet? Because in New York, it's only about 50%. Silicon Valley, maybe even less. In San Francisco, even less than that. But I'm hearing in Europe that there's a lot of people have gone back to work. So I don't know. What is it like in Cleveland?
Yeah, it depends on the industry, I think, for sure. Virtual is never going away. I think it'll be 15 to 30% forever is my guess. Yeah. Maybe more, depending on the industry or the geography. 3 out of 5 days a week, it feels pretty normal in our offices.
Yeah, 3 out of 5 days a week. So, but do you think that hurts productivity? So look, I've been remote working for 20 years, believe it or not. When I joined Red Herring Magazine in Silicon Valley, I got a computer and a mobile phone, but not an office. So that was 20 years ago. And so that was my roving lifestyle and until COVID hit. And but I'm still kind of roving, but mostly domestically now, from New York to Silicon Valley and other spots. And of course, the Rust Belt, sorry, I shouldn't have called it the Rust Belt. Let me call it the Great Lakes region. and because you're not so rusty anymore. Yeah, all that manufacturing is shaking off that rust. So, but you know, it is interesting to see how technology has impacted our manufacturing, advanced manufacturing, and
Tremendously.
Internet of Things, and robots, and AI, and 3D printing. All of that is part of manufacturing.
Oh, absolutely. And we're definitely seeing that significantly here. But specifically to your question, I think given the turnover in the job turnover, the staffing turnover that's going on across the economy, including startups, we have people working for the big tech companies out of Cleveland, I mean, they don't have to move, but they're, so there's been all these dynamics. I think for a manager, whether you're running a 10-person startup or a 500-person organization, if you're a manager and you have a lot of staff turnover and you do not have the opportunity to build a more normal or a more traditional relationship with your direct reports, it's a lot harder because you don't have I mean, if you've been together for 5 or 10 years, you know how each other work. That can have its challenges, but I think that can work. But if you have a new management team and you don't have the experience to rely on, and you're trying to read each other's expressions on Zoom, and you don't really know what a look means, I think it's much more challenging. Than it used to be.
Yeah, body language counts, I think.
Yeah, I think it does. I think, and new managers, young managers, I'm sure they'll just figure it out because they didn't know anything different, or and obviously a lot of companies are sometimes started by folks that haven't spent 20 years in an office or 30 years in an office. So it'll be interesting, but I do think all in all, I think for society, the positives outweigh the negatives. For sure, I think for the society, but for a manager in a young tech company,
sure.
I think it brings particular challenges.
Yeah, and I think it amplifies the talent shortage. There's definite talent gap out there.
Oh, huge. And it's only going to get worse. We really need our immigration policy to dramatically change as a country. And I believe it will change. Hopefully we don't have to go through 5 to 10 years of pain and suffering. Hopefully it's only another 1 to 3 years, but that must change or we're in big trouble, I think, in all dimensions of our economy, but particularly in the tech sector.
Right. So one of the benefits of your experience is that you've actually seen how some of these government supported spending programs can work and how you can manage those and leverage those to get more funding. Can you talk a little bit about what kind of funding is available for JumpStart, and for Ohio's growth, for instance, the SSBCI funding,
Sure.
And other programs as well, the Ohio Third Frontier program. You have really been in the forefront of leveraging those and showing others how to leverage those programs.
Yeah, I've had a few occasions in my life at being at the right place at the right time. And certainly creating JumpStart in 2003, 2004 was absolutely the right time and the right place because the Ohio Third Frontier was created in 2003. And the Ohio Third Frontier is now a $2.2 billion public-private partnership with the state government providing very, very significant grants and loans to accelerate and strengthen the entrepreneurial tech ecosystem of Ohio. You can do the math, 2.2 billion over 20 years is still a heck of a lot of money. And what the state has been able to do is build a program with a very, very smart, intelligent program that not just catalyzes investment and economic growth, whether it's industry expertise, all these different kinds of programs that they support, but also requires private match. So this isn't a giveaway. This isn't, everything that the Ohio Third Frontier does is measured. It requires state match. Yet at the same time, it can align to the industry priorities or goals of various regions. some regions are focused on, an estate of 12 million people. You've got different regions that have a different area of focus. So I'll give you just a little snippet of, so JumpStart in the last 20 years has raised about 50 million of funding from the state of Ohio to catalyze 140 million of total capital.
Oh, wow.
About half of that 50 million originally came to JumpStart as grants. Now, maybe it's a little less. Maybe let's say a third of it came as grants 15 years ago. All of that had to be matched, though, and sometimes it had to be matched 3 to 1, not 1 to 1. So a lot of leverage. And now, more recently, it comes to us as a loan. So they're making a loan to a venture fund, wanting the loan and some interest to be paid off, but all the upside goes to the other LPs. And so that money from the state has allowed JumpStart just in the last 10 years, or let's say over the last 12 years, to generate, gosh, $11 to $12 billion of economic impact for $50 million worth of loans. Or 20 million in grants and 30 in loans. So the fact that there's actors, and JumpStart's just one of a dozen entities across the state that gets support from the Ohio Third Frontier just for investing, that partnership has enabled us to build a venture ecosystem in our state. Without the Ohio Third Frontier, the venture ecosystem that exists today would not be there, because this whole chicken or egg problem, who's going to put up the money?
Right.
all these things are linked. And so the Third Frontier has been a remarkable program that's generated huge benefits to Ohio.
Is that ongoing? Are they refreshing that? Because I've heard different stories that maybe they're running out of money.
Yep. So believe it or not, the last time this program was taken to the voters. So in 2010, 13 years ago, almost, the voters authorized $500 million for the Third Frontier. And that money has been being deployed over the last 12 years. And there's about 80 million left of the 500 million. Now, a lot of the money that they've been putting out are loans. So there's going to be a lot more money coming back to the Third Frontier over the next 5 years. Probably another 80 million will come back.
Okay.
But once you get down to less than 10% or so, there is this awareness that we want to take action to try to ensure that there's these dollars in the future. So it's early days, but I would anticipate over the next year or so, there'll be a set of stakeholders across the state: universities, healthcare institutions, research institutions, funds like ours, who will come together with the executive and legislative branch to try to figure out how this can be extended. Ohio, like a lot of states, has a lot of money right now. So our rainy day fund in Ohio has $3 billion in it. And there is a very large government surplus in Ohio right now. So whether it's through those dollars or through a ballot initiative, it remains to be seen. But I do think the Third Frontier has had a huge economic benefit to the state.
And what about the AskAVC funding?
Yeah, so for your listeners,
directly from Washington?
Yeah, so this would be really important for your listeners to understand. So in the American Rescue Plan 2 years ago now, one of the many programs that was approved is called the Small State Business Credit Initiative, or SSBCI. And that is $10 billion that is being granted from the U.S. Treasury to 50 U.S. states, 6 territorial governments, and some tribal governments. And 9.5 billion of the 10 billion is capital, and 500 million is for technical assistance. It's to enable organizations that are coaching entrepreneurs to have the extra money to be able to do that, to get them ready for capital, or to allow them to maximize the benefits of capital that they've raised from SSBCI. So this 9.5 billion has been awarded to the states, and now every U.S. state is activating their own access to capital programs that will support both traditional small companies, restaurants and the everyday Main Street companies, but also a huge portion of this money is going to go into funds or to be served as direct investment in tech companies across the country. And the reason for that is that Treasury wants 10 times the leverage. So Treasury wants $950 billion to be invested in companies across the United States as a result of their $9.5 billion. So, and the only way you're going to get that kind of leverage is to invest in tech companies, right? If you're investing in Main Street companies, they might leverage the money to some degree, but they're not going to 10x the money or 15x the money.
Right.
So to give you an example, in Ohio, that's the state I know best, there's about 100. So Ohio got 182 million of this 9.5 billion. And 115 of the 182 million is going to go directly into venture funds in Ohio. And if you, for context, if you say at Ohio and just the neighboring states of Ohio, Michigan, Pennsylvania, West Virginia, Kentucky, and Indiana, and Ohio together, they have $1 billion from SSBCI. So that means probably as a group, 450 million of those dollars are going to go into venture funds focused on investing in those states.
I see.
So that's a huge amount of money.
Yeah.
And that money must be matched as well.
I see.
So
that's the issue though, right? You talked about how the LPs are kind of reluctant. Your limited partner investors are reluctant.
Well, they are, but typically if you can raise half the money, someplace else, and particularly this money, it just needs to be paid back. So all the upside.
Yeah.
So if you had a $50 million fund and you had 10 million from your state and 40, well, let's say a $40 million fund, and you had 15 million from your state and 25 million from your private investors, once you've returned the 40 million and the state's paid back, all the upside goes to the private LP. So there is an incentive. It's leveraged basically. So and every state's programs are a little bit different, but if you're every state has the least amount of money any state has is $62 million. So even Rhode Island has 62.
Which state is that?
All the small states. So it's based on population. So the smaller states, but they have no less than 62 million.
Oh, wow. I see. Interesting. So how would you rate Ohio's startup ecosystem in comparison to others nationwide, aside from the coastal states?
Well, it depends obviously on, if you look at the pure numbers, we're in the mid-teens. So if you say like, what's the dollar amount as a state? We're in the mid-teens. I do think we have a very real chance. Ohio has a very real chance to break into the top 10.
Okay.
And not only is that because we have an established ecosystem with, a half a dozen to a dozen players, which is meaningful, and they're investing and generating returns, but also we have other partnerships there's another entity in Ohio that's really plays a meaningful role called Jobs Ohio. So Jobs Ohio is the privatized economic development entity. It was created about 12 years ago, and it's investing in tech startups now too. So they've invested about 100 million, 125 million in 100 startups in Ohio. And so there's another actor. And then, of course, as our companies are getting exits, so, the Excels of the world, the Francisco Partners of the world, the NEAs of the world are investing in Ohio. Now, they're not doing it every month. So you've got these uber West Coast investors who are doing deals here. And so, again, I wish it was happening a whole lot faster, but, I do think Ohio can break into the top 10 over the next 2 to 5 years.
Okay. What would you say was the biggest news that came out of Cleveland in the past? Let's just give it 1 year. What's been the biggest news recently in this whole startup venture capital arena, economic growth?
Yeah, I would say that there's companies. I would say there's companies raising 40, 60, 80, 100 million with a lot less effort.
Yeah.
than they've ever been able to
Well,
achieve.
name one. I'm just thinking about the Intel plant near Columbus and the Honda plant that's going in near Columbus. What's happening in Cleveland?
Well,
Sherwin-Williams is opening something else.
sure. So I think one of the things that your listeners, it's not directly correlated to venture, but I think there isn't a 4,000 employee plant being built in Cleveland right now. So we don't have the story in Cleveland that they have in Central Ohio, partly because we don't have the 6,000 contiguous acres that they're building things on.
Yeah.
So that's part of it. But one of the things that's fascinating is the urbanization, or so there's 22,000 people living in downtown Cleveland. 10 years ago, it was 8,000.
Oh, wow. Yeah, no, the downtown Cleveland nightlife was kind of vibrant. Yeah, I mean, the
So
district, and then you have
right. So the urban infrastructure of Cleveland has been transformed, not just the core of downtown, but our city is divided by a river. The west side of the city is exploded in a positive way. And now the east side of the city is also going through a huge economic transformation. And actually, JumpStart's offices are on the east side of the city in a neighborhood called Midtown. And actually today, earlier today, I walked 600, 700 yards from here, and they were breaking ground on a 100,000 square foot collaboration transformation center that JumpStart is going to be a master tenant in. That'll have a brewery and a nightclub and 6 companies in it, and Case Western Reserve University. And so some of the most important assets that are needed to connect the dots and to accelerate our innovation economy are being built as we speak.
Okay.
So we might be a little bit behind, certainly other places, but we're catching up, and I think the level of collaboration is at an all-time high. I think cities like Cleveland, they would have figured out a long time ago that we need to collaborate more. It's hard to change behavior, and when you've got a city that has a tremendous amount of wealth. I mean, we had 28 Fortune 500 companies here 30 years ago. Today we have 6. So just have been a massive economic transformation. So we're getting our mojo back, and on the startup side, because we've had, and on the fund side, because we've had funds who've been plugging away, our fund sizes are getting bigger, our check sizes are getting bigger. I mean, I'm anticipating that JumpStart Ventures average check size over the next 3 years is going to get to 2.5 million, where 10 years ago we were 500,000, right? So it's not 10 million or 15 million, because it just takes so long to get to exits, but we are making progress, slowly but surely.
How does an entrepreneur link in with JumpStart's programs, and does the startup have to be based in Ohio? I imagine so, but how do they link up with everything that you've got going?
So you could go to our website, jumpstart.vc is our investing website, or jumpstartinc.org is kind of the mothership. So there's all sorts of free programs that are available at jumpstartinc.org. Some of them are online. Some of them, of course, are cohort or whatever here in Ohio. We are interested. We have the ability to help companies that are outside Ohio. But particularly, we're interested in ones that would see logic in connecting to Ohio in some meaningful way. I'm not necessarily saying moving their headquarters or anything, but just we have a tremendous amount of big customers, first customers that many companies would be interested in ventech and in healthcare IT. So we're very open to, and I should also mention JumpStart's team. The JumpStart Ventures team is about 15 folks all in. The JumpStart team is 70 folks, including the ventures. So there's another 55 folks or so that are part of JumpStart that provide all this training and coaching and help with various challenges that entrepreneurs are facing, both small business entrepreneurs and tech entrepreneurs.
How do these entrepreneurs get that funding though from JumpStart? Do they have to pitch somehow, win a pitch
Yeah.
competition?
No. We operate like a traditional VC. Come to us, go to jumpstart.vc, fill out a form or whatever, clue us in. You can email me, Ray.Leach at jumpstart.vc, and we'll be happy to connect with you. But we function not like an accelerator. We function like a VC. So we're like, I just looked at our pipeline. We're working on 12 companies right now. We're doing 2 to 4 investments a month. Average time to investment for us is probably 90 days from the day maybe a little longer, 70 to 100 days. So we try to get to a quick answer. We're not looking to extend anything too long. But we function just like any other seed and Series A VC would function.
All right, so you have a venture committee that makes the decisions?
Well, we make every decision together. So there's the whole team vets all the deals and is involved in the deals. And of course, we have people that lead in different industries and that kind of thing, but it's kind of all in together. So we don't give one partner a certain set of money and he or she goes, we do everything together in terms of decisioning.
I see. Well, it's democratic. All right. Well, that's great. Look, let me share a few more notes about what we have coming up, and I really thank Ray for doing a great job today with the show. And so our next show is coming up in next week, March 7th. We're going to have Steve Case on the show. And some of you know him from Revolution and Rise of the Rest. So that's March 7th, 4 to 5 p.m. And I'm speaking at South by Southwest on March 11th. And then I'm doing a road trip through the Heartland and hitting Cleveland on April 14th at the City Club. And Ray's going to be speaking there, and also Beju Shah, who's been very instrumental in driving Cleveland's growth through the Greater Cleveland Foundation.
Partnership.
And partnership. And besides Cleveland, I'll be in Pittsburgh, Cincinnati, Chicago, DC, and other places. I've already been to Tulsa and many places through our Heartland series, which has been online. As you can see here, we've been in Indianapolis and most of the Heartland cities, actually. And I'm going to be going to Milwaukee and Madison, Wisconsin later on with my book tour. So I'm looking forward to that. And the book tour is starting right after the book launches on March 7th. The book can be pre-ordered on Amazon. It's my 4th book, and it's the closest to my heart because I'm from Ohio. And there was a lot of research involved in doing my book. I did a major road trip. This is the core of the road trip. This is the car that it went in. That my Honda Element still running. And it's got to make another trip right after the book launches because I'm going back to the Heartland and hitting Cleveland and all these other great places. So please join us on this tour and join us next week, March 7th, for our show with Steve Case, the founder of AOL. I was just cleaning out some drawers here yesterday. I'm in New York City this week for a change. Usually I'm in Silicon Valley, but I was cleaning out some drawers here in the apartment, and up came the AOL, disc. Oh, put this into your new Toshiba computer. And I thought, gee, should I hold on to this as a souvenir or should I throw it out? So I think I need to ask Steve that question next Tuesday. So Ray, do you have your AOL disc?
Oh yeah. Yeah, we all have those still. Yeah, that's incredible how many of those are probably in landfills now, but
let's blame Steve Case for all of that landfill problem. But it's all about recycling today, and JumpStart's on that with all of those funding and all those investments you've got going. And I know sustainability is one of the things that you're focusing on too. So yep. Yeah, so Ray, anyhow, thank you so much for being on the show. It was a delight. And for those who would like to tune in later and watch it again, it's going to be on YouTube. It'll be on our newsletter, our website, and I'm sure JumpStart will share it out as well. So those of you who are in Cleveland today, please come to our City Club event on April 14th. It's a lunchtime event. And many people in Cleveland know the City Club very well. So again, thanks to JumpStart for all your support. And I remember when I came to Cleveland on one of my research trips, and you hosted a wonderful roundtable dinner outside because it was COVID, and we were outside of this wonderful restaurant called Albatross. And many leaders of the venture scene were there. And so I appreciate that too. It's really helpful. Okay, we'll see you again April 14th in Cleveland. And thank you, Ray, for being such a great guest on the show.
Thanks,
And
Rebecca.
thank you, everyone, for your great questions. So see you next time.
Thank you.
Bye-bye.